Hello everyone, Zach here. Just wanted to cover BTC's price action and analyze what happened between my previous update on Bitcoin and the current one. So yesterday we got a CPI print, which was cooler than people anticipated, especially after getting a very hot PPI, getting a milder CPI, uh, had this reaction, caused this reaction basically. So people went into euphoria mode and then pumped the market. I wouldn't call it people pumping the market exactly. There are other entities which flood the market, inducing retail to enter the market and move in the direction those entities want to take the market to. So, but let me play a clip first where I explain the exact scenario that played out and the dangers associated with that, with this scenario. This is the clip from my previous video. Let me explain the dangers around this range. So as I was explaining in earlier videos that we are trading into a range. So this was the first range that we traded in for a while. And this is another range. Now, the longer this range continues, we are building liquidity on both the end of the ranges. And that means those liquidity zones are going to be target of market makers. So we cannot rest any strong rally within this region because it could just be rotation back to the top and then to the bottom. So we can do something like this. Come back down, get a very nice rally. Okay? It will look like that we are moving up. But what we bump into is this zone of liquidity, which we almost front ran. And this is called inducement, where we come to a point of a place in the price action where liquidity is, but we don't take it. So market makers are building liquidity around here by inducing the retail to short here, and then they will come back up very strongly to take out these stops along with this liquidity, and then back it back down. So this is very reasonable and logical ways to get into a short. Okay? Why? Because there is another reason as well. So if you look at here, this is the inverted head and shoulder. So whenever we start seeing these patterns on the time frame, right, you should always look at them with suspicion because these patterns are very visible patterns. Everybody is looking at them, even market makers are looking at them, and then they always look for opportunities to exploit these patterns. Whenever we get to this place, a lot of retail they will want as soon as we see a break above this high, a lot of retail will basically think now we are breaking out, and they will just open a long position in this height over here, and then they will think that we're going to 32K. They'll open a long position here, will stop somewhere around here, and they will get right. Market makers will take this liquidity and then go back down, at least to stop them out. This should never be. I mean, I would never play any kind of head and shoulders over here. If I wanted to play this head and shoulders, I would like to get into a nice long in this zone, not over here. Okay, so just be careful. The only confirmation that we're going higher is if we get a close above 67. Okay, so a high that we made over. As you saw, I was explaining this scenario where how this can be a trap, and then this is very normal to see it play out in ranges. Like we saw over here, we came down and then we had a nice rally, but we stopped here, we came down, we had a nice rally, we went even deeper. So rotations are very normal when you are trading within a range. So when you're trading within a range and there is no real fundamental reason to actually break out, there is no new money coming in, we will keep doing this where this game is being played by market makers. They also want to make money, so they make money like this by rotating the price between range from top to bottom and from bottom to top. So far, I am neutral. So, I mean, there are signs that this could be the breakout that we are looking for. So we actually broke this market structure and closed a daily candle above this. So this is a break in market structure on daily time frame, which is bullish. But we also got a rejection from the exact place I was talking about in the video, that this is a zone of liquidity. If you go down in the 4 hours, you can see here, this is a zone of liquidity, and this is the POC from where we rejected right now. And right now we are trading below this particular break. We are back in this range, the range from here to here. So if to be bullish, we need to hold this, but we are back below this and we are rejecting from there right now. So I actually posted this trade in Discord over here. So exact level 66,750. and we got a very nice rejection from there, and people are in nice profit right now, and it can go deeper. I have already taken profit around 65 100, can go back up for another swipe at this liquidity zone like this, and then come back down further. What would invalidate the scenario where we are going to see a move down from here is a close back above this range, above this particular wick. Even better, this highs, but a close on 4-hour time frame above this wick would be a good indication that we are going to continue higher. Why? Because let me show you how many people or how many traders are trapped here who thought that this is the breakout, but it was a trap. So let me put the volume footprint chart here, and this is on just one exchange, Bybit. So this is the wick. I entered along with other people entered the short over here, 766, 750. And that is where a lot of people actually longed, which I strongly advise against because breakouts are the most trappiest trades that you can trade. So you can see the volume in this particular week, particular candle on 6 minutes. This is like 27 million people were trading in this candle. And 27 million transactions took place in this particular candle. All these on the left hand sides are the people who sold, and these are the people who bought. Everybody who bought here is basically essentially trapped, with the highest volume coming in around 66 to 90. So if we are to go back up again and close above this, that means all of these people who are trapped here, they have already exited their position in longs. Now closing above this is going to be a bullish scenario, and then we are going to continue higher from there. But so far, what I'm seeing here is for the normal candlestick chart over here, I am seeing this as inverted cup and handle. And if we break down, we go to very important place in this price action, 63 500. So if you do get a breakdown from here, the target is 63 500. Okay. And 63 500 is a very important level. So if we start closing back below this particular level, which is the first place which caused the breaking structure from bearish to bullish, if we close back below this, all of this is a liquidity, which means we, after spending a little time over here, let's say we get a close back below this 63 500, 63 400 on 4-hour daily time frame, all of this liquidity which we front ran last time, we are going to take it, and we are going to take it very fast. We will come down very fast and possibly hold somewhere around 58K, do a small bounce to test this as a resistance, something like this. Very strong move down, 58K, go back up, test this as a resistance, and then go down. So that's what will happen if we start closing below this. And let's consider the bullish scenario for now. Let's say we come down here, we play the cup and handle, and then come down here, and we hold this, and we start moving up, and then close back above this particular high or this high. They're very close now. So liquidity from here is already taken. So I think closing above this is also fine. So if you close above this on daily time frame, I think we are good to go up from there. But there are other things which are other signs which are pointing down right now, at least to get to this level, is the Dixie. I posted about Dixie that I posted a short on gold also based on the Dixie and where the gold was. So it is Dixie as is at its weekly support zone right now. And on 4-hour, it was extremely oversold. And combine that with weekly support and this order block, a move up is expected from here in Dixie. So if Dixie is moving up, as you can see, Dixie is moving up right now. Bitcoin and other assets will find it hard to keep going up. So, I mean, my expectation is that Dixie will get a small and maintain the market structure to, to the bullish side. But if you don't do that, yeah. So as I said, this is a trap, and rotation is the name of the game when you are in the ranges. So so if I took the shot over here, enjoy it. If you missed the long from this zone, I longed around here 61,300, and I closed my long right around 66,200. So if you miss the long, you have an opportunity to get into a long around here 63,500 to 63,100. So this would be the place where I look for long with stop somewhere around here. And then if the markets are actually bullish, we should get a move up to higher 70K zone. So yeah, so this is, so that's the update on Bitcoin for now. I'll post this in Discord, and if you guys have any questions, ping me.